Investment volumes are expected to grow 10 to 20% this year in Singapore, despite a gradual decline in interest rates potentially slowing investment recovery. Here to discuss this are Bastian van Bijsterveld from Colliers and Wong Shan Yang from Cushman & Wakefield. Let's begin with Bastian. What has been driving the increase in investment sales recently?
The majority, around 33% of the volume recently has come from GLS, so government land sales deals. And if we exclude those deals, investment sales over the last 12 months or during 2024 was mainly boosted by industrial, with close to 29% residential and retail sectors. So these robust transaction volumes during 2024 show that there is still confidence in Singapore's real estate assets and improving sentiment, investor sentiment.
I mean, just to add on, I think other factors that also driven investment sales is really an expected decline in interest rates, right? So easing borrowing costs, I mean, it is a driver of investment sales as it expands the range of viable opportunities, right? Increases market liquidity. There has positive implications for capital values and property demand. And what Bastian has mentioned, right, there is confidence for Singapore real estate, right, across most property sectors. Operating performance has been very resilient. Right? We have observed high occupancy rates, and rents are still continuing to grow. And I think a big part of this is really due to our constrained supply pipeline, right? And in part, that's also because of Singapore's planning regulations. So all this together, this makes it very appealing for investors looking for stable income streams and long-term capital value growth. And I guess another factor that we're also seeing is, we're also looking at seeing more assets are also coming into the market for sale, right? So while the interest rate trajectory is downwards, right, and interest rates are expected to ease, though it may remain higher for longer, right? It's expected to stay higher compared to pre-pandemic levels. So some asset owners, right, they are facing higher financing costs, right, when they refinance, and they are still looking to deleverage and recycle capital. So in Singapore, prime assets, they are typically very tightly held, right? And so with this deleveraging exercise, right, we do anticipate the more assets to be made available for sale, right? And this will be met by keen investor demand.
So Shanyang, with this increase, which real estate sectors are we expecting to see the most growth in 2025?
So we anticipate keen demand for industrial, residential, and for the retail sector as well. So industrial properties, they continue to offer very favorable positive yield spreads partly due to a shorter tenure. And we also see more opportunities emerging on the back of an expected rejuvenation in the industrial market, given that industrial rents have grown really strongly over the last few years, right? And this would drive opportunities for value creation. Secondly, residential. Urban's appetite to land bank is expected to increase on the back of a surge of new sales at the end of 2024. To that said, I think developers will still continue to be selective in their acquisitions given current cooling measures. So price, especially in the en bloc market, remains a key factor. And finally, you do see more interest for retail, right? And it is coming onto the radar of investors. Right? I think the retail market is really a surprise on the upside, right? And proved quite resilient, right? Considering the rise of e-commerce, right? But we have seen tier one retail malls, right? Those that are well located with a good tenant mix, right? They have adapted well to e-commerce, right? You look at occupancy rates, especially for suburban malls, right, are really very high. And most retail sales are also still being done in physical stores. So while retail is also, it's more complex asset class as compared to office. Right, the net yields for retail are higher as compared to offices, and this is attractive in an elevated interest rate environment.
Yeah, so we are forecasting that investors are expected to continue to focus on retail, hospitality, and industrial assets, really assets that either have a value add or redevelopment potential, or maybe assets that are currently underutilized or with active management, a higher return can be achieved. So basically assets that have the potential to have a bigger spread between the interest rate and the return rate, whereby there's a potential upside over the short to or medium to longer term.
And is there anything we should be careful of? What challenges could slow down the projected investment growth?
Of course, if global interest rates cuts are slower or less substantial than anticipated or forecasted, that could have a potential negative impact on some of the investment levels that we are forecasting. Generally, the spread here in Singapore is pretty tight or pretty low compared to maybe some other countries around the Asia Pacific region. So then, of course, from a competitive kind of distribution of the regional portfolio, investors might rather first look at other countries than at Singapore because they require certain return levels.
So I think global geopolitical uncertainty remains, I would say, the key risk for Singapore, given our small and open economy, right? Especially what happens in the US and China can have implications on Singapore's inflation, interest rates, and also property demand. But that said, I think Singapore is well positioned to navigate this unpredictable environment, right? If you observe across many markets, right, we see a very limited supply pipeline, especially over the near term, right? And demand has seen a recovery, especially in the last quarter of 2024. But that said, there is a degree of uncertainty in 2025, and depending on how events play out, some investors might choose to take a wait and watch approach, and this would invariably affect investment sales volumes.
Thank you so much for sharing your insights, Bastian and Shanyang. Looking forward to having you both back on the program.
Thank you.
Thank you, Seth, for having us.
Once again, those were Bastian van Bijsterveld, Managing Director at Colliers Singapore, and Wong Shanyang, Head of Research for Singapore and Southeast Asia at Cushman & Wakefield. For more news, visit realestateasia.com.